Guys, welcome back for yet again. oh, Welcome back to yet another episode of the Silly Balls. And today we are going to cover a very interesting topic. One of my favorite topics today in the markets is commodities. And also, just dive into this otherwise very deep and very complex asset class to understand or try to understand what's going on in the markets. Why do we see those price actions? And just what the going on. So actually, I give it away to Vlad straight away because I know that he is much deeper into researching the geopolitical backgrounds, macroeconomic shenanigans around commodities. He's also elbows deep in some certain commodities like wheat, or I think you were also into corn, right, or some other agricultural stuff. But anyways,
I'm gonna take the conversation back to that point. Actually, I want to get started on this topic with a quote from our dear friend Carlos. One of his most iconic one-liners, sorry. You either die young or see yourself invest in commodities.
Exactly. Just a quick thought on that. Yeah, I think, guys, commodities as an asset class is quite interesting because in the last 10 years, no one really was interested in commodities, right? So we didn't really see, we are having these conversations around investing for years now, and commodities was like a gray zone. But now, obviously, for some certain reasons that you're gonna explain in a second, things are changing. So yeah, what the is going on?
Yeah, exactly. So the commodities have been pretty much on the bottom of the investors' wish list for quite some time, because the biggest priority was always, the headlines were always tech, biotech, then some oil, and then again some tech,
And then some tech. Maybe there was some tech as well. Yeah, yeah.
Yeah. No, I mentioned oil, which oil, of course, is a commodity, but this one is it's a bit more often traded, so that's why I kind of excluded it from the commodities topic. Anyways, to get back on track, yes, commodities have been the play for 2022 for sure, and for a number of reasons. First one, of course, you guys must have heard it by now, maybe, but there's a pretty big conflict that's happening right now in Ukraine, unfortunately, and that kind of drove the commodities market. Why? I was just watching a podcast by Professor Asvalda Modoran. Side note, if I mispronounced it, big apologies. And then he made this really nice contrasting picture. Ukraine and Russia, GDP, out of the world GDP, they account for close to 2% out of whole GDP. But still, what's happening there, it's drove the markets pretty much insane. And why? Well, because their commodities footprint is way bigger. It exceeds their GDP share of the world. So, for example, in oil production, Russia is second largest producer. Coal, it's the sixth largest. Nickel, third. Iron, it's sixth or seventh again. And then Ukraine is eighth or ninth. Wheat, they are the biggest producers. Corn, again, one of the biggest producers. So, first of all, this supply scarcity, which was already there, is being exacerbated. I don't think I've ever used that word before in my life. But it's been accelerated. It's been emphasized by this conflict. And then this is, of course, the fuel which drove the prices to this new heights. But in the same time, I actually think that we were pretty much steadily going into that direction, into this direction of really elevated prices. And why so? Well, because, as I said, the supply is not there anymore, and there are a lot of external factors that are hindering this supply chain even more. There is a really big shortage of container ships, and of course the shipping industry is pretty
Tight right now.
pretty tight. Yeah,
Yeah, let's put it.
exactly.
Yeah, let me just quickly chip in, and because you said a lot of cool things that really explain. That was the first word that came to me. A couple of really smart things about what's going on and what's how the current geopolitical events are impacting commodities and the prices of commodities. I just wanted to quickly add two things that if you guys are new to commodities, either as a trading standpoint or an investment standpoint, like investing in miners or that kind of stuff, it's very important to understand that even more than in stocks and equities, the price of commodities are purely driven by supply and demand dynamics. So, and because of that, they're called a cyclical investments. So, just very simply put, if the price of cocoa beans is high, that's basically a signal for the farmers, mostly in Africa, because that's where most of the world's cocoa beans are coming from, to plant more cocoa trees. So they plant more cocoa trees, but because of those more cocoa trees, there are going to be more cocoa beans. They're going to push the cocoa beans price down, and then they stop planting cocoa trees, and then because of that, there's going to be a scarcity of cocoa, and etc. etc. This is supposed to be like this, but of course, it's not that simple. So,
And if you guys didn't hear it, he's talking about cocoa.
cocoa. What?
No,
It's like when you say portfolio.
exactly. It sounds
Okay,
so
so
funny when you
that's
just
I
repeat
should
it.
have picked something else, maybe aluminium or something easy. Iron, that's cool. Anyways,
Iron,
okay,
yes.
guys, you got my point. You got my point. So supply and demand, understanding the dynamics of supply and demand is super, super important if you want to do anything with commodities. And what Vlad just said about these, yeah, basically, yes, the Ukrainian-Russian conflict is basically adding fuel to the fire in a macroeconomic situation where the dynamics behind commodities were already pointing towards a bullish run because of all the circumstances and all what's going on in the both sides of the equation of supply and demand. Sorry, buddy, I chipped in. Just wanted to add this. So actually, moving on a little bit with what's happening right now. So we kind of explained how this conflict impacts the prices, what happened before that. So now we see the prices are on an upward trajectory. Do you see any kind of reversal here, or do you see there's much more room for these prices to run? What about that?
Well, of course, the fundamentals of price action, especially in terms of commodities, will always be supply and demand. But one of the other fundamentals of investing, or actually not of the investing, but rather the key drivers of stock prices, or asset prices in general, is speculation. And at this point, of course, the biggest driver is still the Russian-Ukraine conflict. And until that one gets resolved, I don't see the prices cooling off.
Mhm.
But of course, you see oil. Oil at some point, the Brent benchmark reached $139 a barrel. Just touched that point, but then still, and now it cooled off to what, 90 something, almost 100, around that.
But now it's back to 104 or something like that. So it's
Yes,
still
and
above
then
100.
what changed, for example, in the meantime, so what drove the prices was, of course, the conflict in Ukraine, then sanctions after sanctions after sanctions from the West imposed on Russia means less exports between these two. And of course, if there's less exports, there's less supply in that particular region, which of course the demand will still be just as high. People still need to drive to work, factories still need to run. So the demand is still there, supply got way more limited, and the price went up. And then in the meantime, policymakers, or maybe not even policymakers, I don't know at this point, it's so much media driven. The OPEC steps in. We're gonna ramp up production.
So in your opinion, short and sweet, we can expect to see commodity prices keep going higher until the conflict can be solved. And what about beyond?
So no, this is a really tough question, because the prices of virtually everything, commodity, of virtually every commodity, they got too high too fast. And there is this saying that what goes up must also come down. So I think in the short term we could expect like a lot of volatility. I actually expect um, I expect the prices to actually cool down a bit in the short term, but then again, longer term, everything will get pretty much back to crazy, maybe even crazier. And because in the long term, the reality will hit us. I'm gonna give an example now for food commodities. So, uh, as I said, West imposed sanctions on Russia, but at the same time, Russia imposed sanctions on the West. And within those sanctions, it meant a limitation or tariffs on agricultural exports. In the same time, you have Ukraine, that's one of the biggest producers of corn, of sunflower actually, and also of wheat. Sunflower is not a tradable commodity, but they're one of the biggest producers. My main question is, not question, my main idea is, for example, what is happening in Ukraine? Of course, nobody is going to care too much about cropping the wheat now, but it's winter. What's growing in Ukraine and also in Russia is winter wheat, which means that basically during the winter, the growth process, I really don't want to go into biological terms here, but that one gets slowed down, and then wheat will anyways go and be ready to be cropped in late summer, early autumn. It's there. Now we don't know if there's anybody going to be there to crop. That's something else. But wheat is going to be there. But then you look at corn, for example, and in corn, corn needs to be planted. And I doubt that anybody has any time to or any interest to plant corn right now.
Let's just say I saw, yeah, it's definitely this way because yes, so winter wheat is being planted during the late summer months, early fall months. It basically kind of sleeps throughout the winter, and as it wakes up and spring comes, spring is the harvest time. So winter, yeah, exactly. It's quite hard to imagine that some people in Ukraine right now is thinking about going out on the fields and do that kind of stuff.
I saw this really nice video of a farmer that basically just took a tank that got was left in the playing field because they had no more gas.
Yeah.
So he just towed it away.
These things are happening. We have our friend Adrian. Adrian, hi.
Hi.
He keeps us updated with all those events of fiascos that the Russian army is doing in Ukraine. But I saw another video that was someone was bombing someone. It was a video from those HUD screens when a rocket hits something, and it did hit an artillery or an air defense or whatever. And this wasn't the point. Of course, it's bad, but the place where they were was actually some sort of grain field. I think it was wheat. It was obvious. It wasn't a simple field or just grass or mud. It was clearly an agricultural farmland, and half of it was already burned to the ground. So that's another thing to consider. And so yeah, I think when it comes to those soft commodities, we are going to see some very interesting.
But yeah, I think we're gonna see a lot of volatility. But also, to actually answer your question, because I just took these detours in answering. So I think that longer term, prices will go up. We won't necessarily see the volatility that we've seen for nickel, LME holding trading for this because of a 240-50% jump in one day. Of course, this kind of volatility, we shouldn't expect it. But in the beginning of the year, I started investing in what?
Nothing. I just thought because it's on my list of topics to touch base on that nickel situation on the LME for like 2 minutes, because I think that was very, very interesting, and you just brought it up. So
Okay.
I was about to say thanks, buddy, for bringing that up, but then we just keep talking. So I'm waiting for that part. So yeah, sorry, just
So
carry on.
okay. Now I think I will need to restart my answer, because I just wanted to say that I already started investing in
Wheat.
not in wheat. Wheat I used that one as a hedge, and that hedged my portfolio amazingly. But since the beginning of the year, I started investing in metals. Primarily, I mean, my main focus was aluminum, but then there were two ways of approaching this. First of all, I could have invested directly in the commodity, or I could have invested in a miner. And I chose. I mean, did my due diligence. I chose Rio Tinto for this, but then I didn't choose this thinking that, oh, prices of commodities will go boom because of a conflict in Eastern Europe. I did this simply because I see a long-term scarcity. Yeah, so I expect that in the long term prices will maybe continue to go up. Short term, I would try to be careful with investing in this because, yeah, expect volatility.
I totally agree, and my side to the story is that I also started investing in some of these commodities, but in the beginning of last year, to because of that kind of speculation that these prices are going to go up in the long term. And my explanation behind it was basically, and I just took note of a couple of bullish indicators here, is that first of all, when it comes to soft commodities, is the climate change and the changing patterns of the climate, that in the long term I think, and we can already see evidence of this kind of changes, like we're talking about the drought in Brazil right now. So while the world is focused on Ukraine and Russia, people forget that in Brazil, their crop production is also suffering right now. Not to mention that they're going to have an election coming up soon later this year, and that leads us to the other bullish factor, that is the political shenanigans. And if there is a country that produces some kind of stuff, if in that country political things are not going well, then that's a risk on the supply side that can also move the prices, etc., etc. So that's why I started to sort of pivot towards commodities as early as the beginning of last year. Not to mention just general stuff like the world's population is not necessarily growing, but okay, it does. But also, more importantly, the middle classes all across the developing countries and regions are up and coming. China, but not only China, but also with Southeast Asia, South America, also in Africa. So we see these kind of layers of the society who are consuming more, and obviously they consume all sorts of stuff that needs those kind of commodities. So yeah, my take on this whole long-term outlook was generally bullish, and this conflict just basically sort of accelerated things. Exactly. But I agree with you in terms of I expect the volatility, and I expect that as soon as this conflict kind of fades down, one way or the other, we're gonna see probably a huge dip in those prices, because people are gonna say, oh, okay, it's over. But then I think that's gonna be a quite good entry point, or a quite good price point to jump in again, or just load up commodities because of all those long-term reasons that I just basically run quickly down. Okay, yeah. So
and we also have to think, people, that this whole equation of investing, especially in food commodities, is so complex. I mean, even one-off events such as a volcano erupting, or maybe a tsunami in the wrong place, or yeah, exactly. It can disrupt everything for a few years.
Yeah, and yeah, I remember. Yeah, in our first episode, we actually talked about that volcano next to Tonga. Exactly. Yeah, exactly. Now, lastly, I think we again just kind of sort of drawing towards a close here, because we said pretty much everything we wanted to say about commodities and how do we see the short and the long term things to play out. I just quickly wanted to touch base on two more things, and I'm glad that you brought up that nickel thing, because I really wanted to spend a minute here. Because guys, if you haven't noticed, what happened to the nickel prices or the nickel market is kind of Well, it's extremely funny as well as sad at the same time because it was unheard of, unprecedented what happened on the London Metal Exchange. That basically, when the price of nickel jumped too high because of a short squeeze of a huge player on the market who was also a nickel producer in China,
The biggest.
the biggest nickel producer in China, because that guy who is famous for putting big bets on price movements. He had a huge short position, and because of the Russian situation, the supply and demand equilibrium just kind of tilted. Margin calls were triggered. He couldn't cover those margin calls. The price went, to the moon. Let's put it this way. And then basically the exchange just said that no problem. We put it back to yesterday's closing price. That's
Yes,
it.
sir.
And for anyone who doesn't understand the significance of this and the extreme,
They wiped off how many billions they wiped off in profits?
25 billion dollars of profits went up in like this, and obviously needless to say there is a huge scandal and pushback for the exchange. Not to mention that after that they also had some fiascos of reopening the market and trading wasn't going in the way how they should. But if again, guys, if you just imagine that you are invested in Tesla or invested in oil or whatever, and it still could happen that because of some shenanigans, someone just bets too much on one side of the trade, Tesla goes up to $2 million. I just said something. And the next day, the exchange says, no, it's something went wrong. We rolled it back to yesterday's closing price. And all those profits that you thought you made, just this. So, exactly. So, commodity is going to be a funny area to watch. And that actually draws us to the very final question, I think, on which we can kind of wrap things up. And that is, if someone is interested in investing in commodities or taking advantage of profiting from the upward price movements if we see those. You already briefly mentioned the ways to invest in commodities. Just wanted to ask you to give a bit more background on how to play certain commodities. What are your poisons?
Yeah, so I think there are pretty much two big ways of investing in commodities. The first one, actually, like the principal one, is investing in future contracts. Mm-hmm. And this kind of applies to all kind of commodities. But there's always a big but. Future contracts expire. Yep. Usually they expire. For example, wheat. I'm gonna give this example. The futures traded in the Chicago exchange, they expire 3 times a year. Mm-hmm. What I did, and quite successfully, I would say, I started investing in wheat in October last year. I started investing purely because of the supply problem. But I didn't know, and nobody can ever know when the market will actually get sane and say, okay, this is a problem, or oh no, this is not a problem anymore. So prices will still have this kind of bias inside them. And then you cannot really offset this. And then, as we discussed in a previous episode, you don't know when, when the contract will end. You don't know if the price will be there when you want it to end. So what I did, I invested in an ETF that's following these futures. Mm-hmm. And because it's an ETF, it doesn't expire. You could actually do a lot of...
It rolls on.
Exactly. So this ETF that I invested in was actually following all 3 future contracts that were expiring at different points throughout the year. And had I invested it October in the contract that expires December, maybe I would have made 1-2% gain, which is okay, nice. But because I invested in this ETF, I managed to get out with 40-50% gain, which of course was driven by this conflict. This is one. So mm-hmm. Futures / ETFs based on those futures, or second one, producers. you can either so for example, if you're talking about metals, you can discuss about um, miners. If you are talking about oil, you can talk about
Oil producers.
exactly producers, or who can also be the ones that sell. So for example, I'm not gonna go into the Russian companies, but BP, Shell.
Lukoil, no? No
No, no,
Lukoil?
no. Let's not go into that topic.
Okay.
Um, so you have to think, okay, who in this supply chain, who actually has the pricing power?
Yeah.
Because there's also like the reverse model. So for example, supermarkets or companies that deal with food commodities that of course have the pricing power, but they're not the ones that set the price right at the beginning. So those who actually crop the food commodities.
Yeah, the farmers basically, those who, yeah.
Exactly.
Yeah.
So let's say let's assume you invested in Carrefour, which Carrefour, they increased um, their prices, or Walmart or whatever. They increased their prices, but they could not keep up with the pace at which the commodity price actually surged. So at the end of the day, they have higher revenues but lower margins and lower earnings. And of course, the markets will not appreciate that one. So you also have to think, okay, where in this spectrum of supply chain, where do I want to invest?
Absolutely. I mean, that's pretty much, fair and square in this form. So the two main forms of futures and producers, or miners or whatever. The only funny thought I wanted to add to the future trading is that, guys, this is not financial advice. I mean, well, being bullish on commodities is just our opinion, okay? This is not financial advice, you know the drill. However, when I say this piece, this is financial advice, be fucking careful. Be careful when you get to future contracts, because future contracts are extremely volatile. They're usually traded with leverage, and not on eToro or not on other retail brokerages, but in the real world, if a future expires on you, that means you have to take physical delivery. So if you imagine that someday the FedEx guy rings your doorbell and there are like 3-4 cargo ships worth of oil or wheat at your doorstep, is because you let your future contract to expire. But that was only the funny part. Obviously, this doesn't happen again with a broker like eToro, because you have these other financial instruments to use to get exposure to those price movements, such as the ETFs that Vlad just explained. So the other assets or ways I wanted to quickly chip in and add to the whole picture is, I think, also a very interesting angle to the whole story, that yes, transportation companies can be also an interesting angle, because if the global supply chains and global supply and demand of commodities are being messed up, we can see some interesting opportunities with those who are moving this kind of stuff from A to B. I know, I can tell from your face that because I'm the shipping guy who's in the elbows deep into shipping companies, but I just read a very interesting article the other day that said, and this will be a very, very simple example. Russian commodities nobody wants to touch them, right? Nobody wants to do any business with Russian commodities right now, because it's like
Except China.
except of China and India, sorry,
And
and the Middle East and some other countries in the world, but mainly China.
nobody in the West.
Yeah, and but here is the thing: just because no one wants to touch those commodities, whether we talk about metals or wheat or oil or whatever, the production of those commodities didn't stop. So those are stockpiling right now somewhere. And this article pointed out that at some point they're going to run out of the physical ground storages and warehouses. And there are the ships, those ships that are otherwise are not welcome in mostly Western ports anyway. So those ships will be started to be used for like a floating storage, pretty much in the same way we saw it about 2 years ago when oil was unwanted. So oil was stored in tankers, basically floating storages on the sea. So this could significantly reduce the availability of ships, and this could create an opportunity where you see there's not enough ships, so again the shipping rates go up. So I wanted to add this quickly as well, and then just call it a day. Guys, commodities. I mean, of course not. So yeah, thanks for joining us again for yet another episode. I hope you enjoyed. We hope you learned something from today's conversation. We definitely did,
As always.
as always. And buddy, thanks for all the insights about the macroeconomic background and all the your area of expertise with wheat and these kind of commodities.
And guys, he's saying wheat, and let me please add the picture. And just because I live in Amsterdam doesn't mean he means weed.
Not, I didn't said weed. I didn't said weed. Oh, is weed a tradable commodity now?
Nah, it's only
Nah.
medical marijuana that's
Uh, that's a
tradable
topic
as
that's a topic for
another
a
episode.
different another episode. But yeah, which will come soon, but we don't know. We don't want to make you any promises, guys, because given how crazy the world gets, we just gonna pick a topic that we think suits the situation, and yeah, just see you all next time.
Thank you guys.
Bye
See ya.
everyone.
Bye.